All right. Good morning, traders, and welcome to the opening bell. Today is Friday, August 21st, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you and to wrap up the week. Markets are taking back some of those losses that we saw yesterday. There's been some added commentary from Secretary Bessent saying that the buyback could be more than the $4 billion. Remember, they were at a max at $2 billion. He upped it to $4 billion, saying that the liquidity on the longer end of the yield is really sort of the problem that they're trying to focus on. So the markets took a little bit of a step back. We're seeing a little bit of a recovery here, but the dollar has taken the brunt of the force. We haven't seen a break lower, but certainly Aussie, biggest performer of the session, finally cleared 72. And we'll go over all the US dollar crosses, gold, oil, and Bitcoin. Any other questions or trade setups, as always, feel free to throw them on the message board. All right, great to see everyone in the room this morning. Hey, Chandra, Angie, Robert, Seth, Terrence. Won't get to everyone, but great to see you all this morning. Here's the DXY. So nothing at all has changed from yesterday as it pertains to the DXY specifically. 98, 68, 98, 69, the May low, the August high day close. Remember, we talked about the fact that it converges on downtrend support. You've been seeing that hold ever since. So DXY, that's the next pivot zone. Okay. If we break below this, it's an open season to the objective yearly open. That's 98.24. And then the 618 of the yearly range is 97.94. Either one of these, I'd be looking for a larger potential inflection in price. Definitely the risk for an exhaustive low starts to mount as you get down there. You got uptrend support off the January low there as well. All things held constant, you're opening the day right above support. Now, initial resistance is right back at that 200-day moving average, converges on the 25% parallel today, and then back at 94.41, 94.49. Remember, that was the support zone. That was the monthly opening range low. All that broke on Wednesday. That's resistance. If the DXY is heading lower on this stretch, rallies should be limited to 99.49, initial resistance at that 200-day moving average. For the bulls to reassert control, for there to be a suggestive low in place and a larger reversal underway, you would need to max the objective monthly open. That's 99.69. So the levels are really well defined on both sides. Okay, downside break from here, 98.24, 97.80, 94, both key levels. Initial resistance at the 200-day, backed by 99.41, 99.49, bearish invalidation at the monthly open. So that's the DXY. Pretty straightforward. Nothing changes from yesterday. Here's Euro. Also an exhaustive move, but not really butting up against anything major as far as resistance. That's my problem with Euro. The major level was still the yearly open. Here's Euro dollar on the weekly charts, by the way. The first pivot zone, the major pivot zone we've been talking for the last 2 weeks was right here at 1649 into that 52-week moving average. We pushed through that and broke through it. We want to see a weekly close above it this week to validate this trigger and momentum. But the big whopper zone is still just a bit higher, 1745 into 1775. That's the 2025 high close. Okay, that's the 2025 high week close registered in December and the objective 2026 yearly open. All that converge on downtrend resistance. So this level is to Euro basically what 98.24 is to DXY. Okay, so that's kind of the focus there on the Euro. You could see some kickback from here. Initial support 1649, then the 200-day moving average. Don't want to see anything below 1609 if Euro is heading higher. Next level up 1745. Look for a larger reaction there. Questions on Euro? We did get some Eurozone composite PMI figures earlier today. Came in at 52.1 versus 51.7, so better than expected. That's a 9-month high, but not much to quell any of the pullback here in Euro. All right, British pound. So you could say it's a similar scenario as Euro. You're breaking back from overbought condition here, and we turned right ahead of that last target. So remember, we talked about 36.58 yesterday. That was the May swing high. I put this in the piece on FOREX.com yesterday. This is the level we need to close above to keep the immediate upside bias in play. We failed there yesterday and closed below. Looks like we just failed again. And this would be, by the way, for the British pound, this is going to be the 4th consecutive weekly advance. I just want to show you on the weekly chart how much of a critical zone we're in right now. This is the 2025 high week close, the week that the high was registered, the close of that week, Same thing for the 2026 high week close. That's exactly where we topped out back in April and May. That's exactly what we're trading right now. So we're at weekly resistance from 1,000 feet up. You drill down to the daily chart. Well, got uptrend resistance just a bit higher. Got the 100 off the low just a bit higher. You got the high we closed at 36.85. Extends into 36.92. We turned just ahead of that. And we still haven't registered to close above the May high. So I'm still thinking the same thing. You know, momentum is right there at the cusp of overbought. I don't want to necessarily fight this yet, but the immediate long bias may be vulnerable here near term into 36.90s, 36.85. Okay, so you drill down even deeper. It's the same levels as yesterday. Initial support is 35.91, 35.93. I want to see, or losses should be limited to 35.58. The July high converges on the median line here early next week. I would want to see losses limited to this zone if sterling's heading higher on this stretch. Topside levels 36.92. Then you're talking about the 2025 high day, not the high week, high day close, and the 2022 high at 37.45, 37.47. So again, levels really clean. The immediate stretch looks like it's a little tired. Could get some pullback. Losses should be limited to 35.58. We're heading higher. Need a break above 36.92 to validate the next major leg in the sterling. As far as data is concerned, we got UK composite PMI that came out overnight earlier this morning as well, coming in at 52.1 versus 52.5, excuse me, versus 51.6. So again, the data not really offering much of a move here, but that clears the docket for today. Just in about 10 minutes, we're going to get the S&P Global Services and Manufacturing PMI out of the United States. Again, we're expecting a slight decrease on the services side, a hold on the manufacturing side. We'll see that in about 10 minutes, but I don't expect much off it. Questions on sterling. All right, Aussie. This is the big one that we've been waiting for so long. So I'll take you back to the weekly charts. I've amended the daily chart. I'm putting together a piece right now. It'll be out at 12 o'clock on FOREX.com. It'll be the 4-hour and hourly and daily chart. But here's the weekly real quick. So we've been talking about 71.20 for the longest time. The upslope that broke was offering resistance for the last 5 weeks, also just gave out. The 618 of the decline off the yearly high just gave out. The February high close just gave out. 71.20's level been watching all week long. That broke. This is now the, what, 1, 2, 3, 4, 5, 6, 7, 8th consecutive up week. This is a doji week. So let's say 7 out of 8 weeks up. Okay. Momentum at the highest levels that we've seen since basically May. So clear cut break, loving it. 71.20 was huge. Here's the daily chart. Well, before we get to the daily chart, the next major level on the upside on the weekly chart, on the daily chart is 72.13 into 72.08. 72.13 is a basic 100% extension off the advance off last year's low. You've got the 618 retracement of the decline off the 2021 high. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact, that's 72.08 into 72.13. That's your next major resistance on the Aussie charts. Make sense? You drill down to the daily chart. Looks like this. So I've removed that former slope that you're looking at on the weekly chart just to keep things clean here. Momentum is approaching overbought condition. Look for that break. This is the highest momentum reading we've seen since February already. So it's the momentum is in favor of the bulls. Here's the breakout above 72. Keep in mind 72.20 or so was the objective weekly opening range high. So it doesn't get cleaner than that. We had that outside daily reversal on Wednesday, which basically reinstated or reaffirmed the weekly opening range that finally broke. Okay. So you're constructive above 71.20 on the immediate thrust. Now, here's a basic pitchfork off the low, high, low. And we've been following that on the weekly, on the intraday chart. But the 75% parallel is right there. The upper parallel converges on 72.08, 72.13 over the next few days into the start of next week. So that's your next major level on the daily chart, excuse me. You drill down even deeper. Here's the 4-hour. You can see the interior levels here on those slope. Really good. Here's the 25%, the 75% parallel. If we're heading higher on this stretch, losses should be limited to 71.20. Your next major level on the upside, 72.08 to 72.14. Now, Bullish invalidation, the level of which broken would suggest that a more significant exhaustive high is in place and a larger trend reversal is underway, is 70.83 into 70.79. That's basically the May objective swing low, the 100% extension off the high, off the low rather, excuse me, 1, 2, 3, and the objective weekly open is right there at 70.83. So a break below this is what the bears would need to reassert short exposure. Initial support 71.20. Losses should be limited to this zone if we're heading higher. Next level up 72.13, 72.08. Required some patience, but finally played out. Questions on Aussie? Quick note on Kiwi. We're seeing a break there as well. Earlier in the week, someone in the room here had asked about it. We had highlighted 59.14 to 59.28 as a key resistance zone. That was the swing low that he made back there in February, and the 618 of the entire yearly range. It was also the objective monthly opening range highs. So that breakout on Wednesday has us looking for a late month high. It's the 21st. We're now approaching, that breakout is now approaching already the next major level of resistance at 59.93, 59.94. That's the objective swing high from May, and the 786 of the decline off the yearly high. Really strong breakout with an outside reversal candle there, taking out the monthly opening range high. That's a pretty conviction break. Next level up, 59.93, 59.94. Look for a reaction there if reached. Any losses should be limited by 59.14 if this is heading higher. You need to close above 59.94 to mark resumption of that uptrend. Make sense? Seth says, thanks for hitting Kiwi. I was going to ask. I got you, brother. No worries. Yeah, I'm not typically tracking this, but it's been a really nice break. You guys brought it up, and thanks for doing that. All right, CAD. So the decline continued, and we're turning just ahead of the objective yearly open, 37.25 into 37.22. We talked about this as being the next major level of support. Both of these, the 618 at 37.75 and 37.20 into 37.25, that objective yearly open, the September lows, the August lows from last year, all right there. So look, you're deep into oversold condition. You don't want to get cute on this trade, but if you're holding short exposure, you want to be watching that lateral level at 37.25, 37.21. Today's close, by the way, if we resolve a close northbound of 37.75, that would be very concerning for an exhaustive low, at least near term. But this has been a very clear-cut trade. I'll bring your attention to the break we made on Wednesday, which was a break of downtrend support. You're seeing that's, oftentimes, as is the case here, the sharpest part of the decline. Momentum was followed through. We closed below the 200-day moving average. This is your first major level. Let me take you back to the weekly chart real quick to show you this pivot zone here at the yearly open and those. It's also the low week close for 2025. The week that the low is registered, the close was right there. You can see the pivot action we saw all throughout last year. It's all right here. It's all right here. Nice momentum trigger. Looks like it's breaking this week. Okay. And really puts a nail in the coffin for that uptrend that we've been tracking since April. So look for a reaction here. If we're heading lower, okay, resistance on the upside, if we're going to head lower, if this rebounds, watch. Obviously, 37.75 is still going to be a pivot. Watch that June open. Really, really clear. We broke through it yesterday and tested it as resistance and turned right off. Bearish invalidation is at 38.69. Forget that 50% retracement now. Okay, that May high. Really nice pivot in price, converges on this 25% parallel. That would necessitate a break above the 200-day. That's your bearish invalidation at 38.70. Okay, losses below 37.25. You got problems. You got big problems. The 786 retracement doesn't come in until 36.46. Okay, and that would just be the first level to keep an eye on. There's a big risk. The May open comes in at 35.82, but there's a big risk if that level gives out that you see a much more propagated decline. So the immediate short bias may be vulnerable into 37.25, resistance 37.97, bearish invalidation 38.69, break lower from here 36.45. Dollar CAD approaching the yearly open. Questions on Loonie? Okay, dollar, yeah, not much to update there either. This thing has just been a mess on the near-term approach. The weekly open resistance still holds at 59.32. Just keep in mind that upslope that we've been tracking since last year still remains in play, right? 1 point, 2 point, got just barely a dent on a close below it there, but that's all still trading above the 200-day moving average. So very low conviction trade, guys. You're fighting, obviously, the MOF, the Ministry of Finance, and the coordinated intervention effort. So key resistance, initial resistance 59.32, key resistance 160.36 into 160.74. That's where you start to get problematic again. You need to close below 57.70 to look for another test of the early open. That's the end. All right. Last but not least on the FX front, Swissie's holding support. That slower parallel that we talked about yesterday did hold. Initial resistance is still holding too. That's 80.09. Remember, if Swissie's heading lower on this stretch, rallies would need to be limited to 80.41. So even if you get another pop here, that's the level to really focus on if we're heading lower. Next major level of support remains at the 200-day moving average. The objective yearly open, that's 59.26 into 59.33. All right, so initial resistance 80.09. Near term, we want to see any rallies limited to 80.41. The median line is right there. Downside break, look for a larger reaction there. Flying through these today. But not much has changed from yesterday. Aussie's going to be the biggest player, obviously, of the day. Okay, that's everything on the FX front. Do let me know if you have any other questions or trade setups you want to review. Now we get into the really, really interesting stuff. Here's gold. So yesterday I talked about it and I put it in the video on StoneX TV. The big whopper zone we've been watching is 45.28 into 45.33. 45.06 into 45.33. The 38.2 retracement of the decline from the March high. This is the 618 retracement of the decline off the April high. The 200-day moving average is there, and we just punched right through it today. Momentum is just about to cross into overbought condition. We want to see that materialize for the next fueled rally towards 47.15. That's the May high day close. And the next whopper zone from here is 48.41, 48.55. That's the 618, the entire decline off the highs from March and the April high close. You can see a really nice pivot there back in February as well. So this is very important right here. Drill down even deeper. Here's the 4-hour chart. That basic low, high, low, right? Resistance was up there as well. That was our concern yesterday. We cited that we were still constructive above 43.76. The pullback didn't get that much far. 45.40 was the low. Here we are with the breakout. Now, if this is a break of uptrend resistance, we would want to see this start to accelerate here. Okay, we're in overbought condition, so I don't want to fight this. But I do think that the immediate advance still looks a bit vulnerable here. I would have wanted to see that break accelerate. One thing, I don't want to jack anyone up here, but one thing, if you take a parallel of the slope, right? So it's the same exact gradient and extend it off to the highs right here. A lot of times you get like a buffer resistance zone. So what is this? Did that break really? I don't know. So we're working with slope. Remember, lateral levels, objective. It's not Mike Boutros' opinion, not FOREX.com's opinion, fact. Slope, subjective. Chandra might have a different slope than Seth, might have a different slope than Acacia. So we want to be a little bit more reserved when we're coming up against slope. All things held constant, though, you're heading against uptrend resistance. So if we're heading higher on this stretch, okay, look for support at 45.06. That 38.2, the 200-day moving average there. We'd want to see this hold if we're heading higher on this specific stretch. Next level on the upside is 47.15. That's the May high day close. And then again, 48.55 to 48.41. But that's what I'm looking at on the real near-term approach. If we buckle back below this, specifically on a closed basis for the week, that's problematic. That's problematic. So we want to see maintained, sustained stability above 45.06 to keep the upside in play. But guys, that's a potential breakout of the entire January downtrend. Momentum at the highest levels since January, right? We want to be paying attention to this. But very clean, very clean. It all started with that multi-month, it was like 8 weeks, 7 weeks consolidation that broke out. It's been spectacular. This was the first major hurdle. We made short order of it in just 2 days. Okay. Chandra, silver I haven't checked out, but let's take a quick gander here. Okay, we just broke through the 38.2. This was the low day close from March. Okay. Looks decent. Looks decent. Let me get that 38.2 adjusted. Okay, so we just broke through confluent resistance right now. Right there. So look, the 200-day moving average is probably going to be your next sort of major level on the upside. That's near 72, just shy of 72. Momentum's in overbought. I put this in the same camp. It's a constructive trade. You didn't have quite the lengthy consolidation like you did in gold, but the breakout did yield this nice rally. So the first level from here, I'd be watching the 200-day moving average. The 618 of the entire decline from May comes in at 76.15, excuse me, on the upside. But watch this near-term slope. Looks pretty clean. So like that's your first major level on the upside if you beat that 200-day. If we're heading higher on this stretch, what's that 618? This is off the low from last year. That's right there as well. What's this 236? Get rid of that. I'd say that I'm just going on the fly for you here. Who is this for? Chandra. Here's the weekly opening range high. Very definitive clear-cut break on Wednesday and tested support. I'd put that as initial support. Okay, below 67.99, obviously that's your first support target. I'd want to see that hold if we're heading higher on this stretch. Bullish invalidation, though, would have to be, from a technical standpoint, would have to be right here. The 618 of the broader ascent off last year's low, the swing low from February, that converges on that low close from June, the high that you made back there in July, right? All of that is going to necessitate a break of that uptrend. So initial support 67.90, 66.55. Don't want to see anything below this for heading higher. Bullish invalidation 63.31. Top side level from here is 72, and then 76.15 is going to be that 618. That converges on basically a little bit deeper into the next month, but if that slope is in play, you got some room before that hits. Challenger, does that help? That's just on the fly for you. It's not a trade I typically follow as closely. He says, thank you, Mike. Sincerely appreciate you looking into my request. More than welcome, sir. As always, guys, love your questions. A lot of times you're looking at something I'm not. It might be a better opportunity for someone else as well. So always feel free to throw those questions out. Okay, Bitcoin. Nothing too much to update on oil, guys. We're just crunching. We're still waiting for any kind of development from the Middle East. Same levels apply from yesterday's update. Here's Bitcoin. Oh boy, what can we say about Bitcoin? Best week in almost 3 years. There's so much to talk about here, guys, and we've been tracking this one even when it was boring for all of last month. Finally getting the breakout, and there's some serious action here. So let's talk about this real quick. This is the largest single week advance basically since 2023, since back here. The next sort of closest weekly advance was right here. And in that instance, you did still see like another 16% rally before you start to pull back. So the highest momentum reading we've seen of the year on the weekly charts, last time momentum was this high was literally when we registered the record high in Bitcoin. You want to pay attention to these things. Okay. So that's all from a momentum standpoint, from a price action standpoint, and breadth of move. Here's the break. The level we talked about for the last 2 months was 70,283. That's the February low week close. Okay. It was also the 25% parallel for this formation we've been tracking since last year. High, low, high, objective. Lower parallel caught support. Beautiful touch at 57,885. That was our target for the year. Here's the breakout. And now we're testing former slope support turned resistance almost to the T. So could get a little bit of a hesitation here. The major level of resistance from here is just a bit higher, 82,193 into 84,100. That's a basic 38.2 retracement of the decline off the record high. That's the May high week close. And in case all that wasn't enough, the 52-week yearly moving average is right there. The median line for the current formation we're in is right there as well. That's your next major upside resistance zone for Bitcoin. Drill down even deeper. Here's the daily chart. So remember, I tell you guys, a breach of uptrend resistance, oftentimes the sharpest part of the rally. A break of downtrend support, oftentimes the steepest part of the drop. Here's the near-term slope we were tracking off last month's low. Here's the breakout, sharpest part of the rally. Done deal. That's null and void. So now we're trading above this key zone here. The 2025 low and the 2025 low close is 74,434 to 76,159. I'm looking to see today's close with respect to this zone. If we close northbound of this, we've now broken objectively the May downtrend. Okay, there's that slope support, turned resistance. You're seeing that capped the advance today. Look for support at 74,434 if we're heading higher on this stretch. Bullish invalidation is back down at 70,283, the same level we looked at on the weekly chart right here. If we break back below this, that's problematic. That would suggest this was a false breakout. So the levels are clear. 74,434 initial support, bullish invalidation near term, 70,283. Topside breach from here, you're looking for the May high day close at 81,447 and key resistance into that 84 handle, 84.10. That's the 38.2 retracement. So the levels are very clear. This is a breakout. Okay, this was the highest. Oh boy, we got a new highest single day rally so far since back here. So expect some kickback, expect some volatility, expect some, churn. But at the end of the day, I think we can safely assume that a more significant low was registered there in July, as we had suspected. To validate that, we do need to see price hold above 70,283. Questions on Bitcoin? Beautiful. Okay. So if there are other questions, we'll go ahead and wrap it up here. Do keep your eyes on the headlines, guys. Aside from what's going on with the Middle Eastern conflict with Iran, the Treasury debacle is going to be central focus. The commentary that Bessent said that he could raise this to 4 billion. My colleague today said a very prudent move. Matt Weller, if you heard his opening call earlier today, more signal than substance, right? 4 billion in the grand scheme of a $30 trillion bond market. It's not really moving the signal, but it's not really going to move the needle. But the signal that sends is one that the markets are paying attention to. And if yields remained elevated, does that in fact do the work for the Fed? Maybe they can hold off on a rate hike throughout the course of this year even. So there's a deep dynamic. The discussions are wide and a wide array all across the board, but keep your eyes on those headlines because the markets are kind of really focused in on this yield move and what's been going on and what that means moving forward for the Fed potentially. So I'll try to keep you updated, guys, as always, on MB Forex. Stay light. Make sure all risk is well-defined heading into the weekend. And I will see you guys on Monday morning, first at 8:30 Eastern for the weekly technical outlook for a full hour. And then right back here in the opening bell at 9:30. Guys, have an awesome weekend. Chandra, thank you. Acacia, everyone in the room, have a great weekend. I'll see you on Monday. God bless.